The strange thing about wealth is that almost nobody actually wants it, not the way they think they do. People say they want freedom, security, power, respect, but what they really want is relief. Relief from uncertainty. Relief from feeling behind. Relief from watching other people win, while they quietly wonder if they missed the game entirely. And that's why most people never become truly wealthy. Because the moment money becomes emotional, clarity disappears, the stock market stops being numbers. It becomes identity, ego, fear, hope, a giant psychological battlefield disguised as finance. And somewhere inside that chaos, hidden beneath headlines, panic, hype, crashes, gurus, influencers, predictions, and endless noise, there's a strange phenomenon that almost feels impossible. Tiny companies, almost invisible at first, quietly turning into monsters. $1 becoming 100, 100 bagger, not through luck, not through gambling, not through genius timing, but through something much more uncomfortable, patience. And in a world psychologically addicted to immediacy, patience feels almost supernatural, because human beings are not wired for long-term thinking. We are wired for survival, and survival makes people impulsive. It makes them chase excitement. It makes them panic during uncertainty. It makes them crave validation from crowds. It makes them mistake movement for progress, which is exactly why so few people recognize extraordinary opportunities, while they still look ordinary. That's the hidden emotional core of 100 Baggers by 100 Baggers. On the surface, it looks like a book about investing, but underneath, it's really about human behavior. About why people sabotage long-term wealth, because short-term emotions feel more real. About why the greatest fortunes often come from doing absolutely nothing, while everyone around you is emotionally reacting to everything. And maybe the strangest part of all, the people who build life-changing wealth rarely look impressive in the beginning. They usually look early, wrong, boring, or invisible, because massive success has a psychological pattern most people completely misunderstand. It compounds quietly, before it compounds violently, and by the time the world notices, the opportunity is already gone. Imagine two people standing in the exact same market. One is staring at screens all day, recluffing prices every few minutes, watching financial news, obsessing over volatility, feeling every emotional twitch of the crowd. The other buys a great business and disappears for 10 years. Who looks smarter in the beginning? The first person, always, because movement creates the illusion of intelligence. Human beings are deeply manipulated by visible activity. We associate motion with competence. Someone constantly reacting feels informed, strategic, in control. But markets are strange. The more emotional energy people pour into them, more irrational they become. Most investors don't lose because they lack information. They lose because they cannot emotionally survive uncertainty long enough for compounding to work. That's the real game, not intelligence, emotional endurance. And 100 Baggers quietly dismantles one of the biggest illusions in modern culture, that wealth comes from constantly making decisions. In reality, enormous wealth often comes from making one or two extraordinary decisions, and then resisting the psychological urge to interfere. Which sounds simple, until life starts happening. A recession hits, the stock drops 40%. Suddenly your conviction starts collapsing. Not because the business changed, because your emotional state changed. And this is where human psychology becomes dangerous. People think they evaluate investments logically. They don't. They evaluate them emotionally, then create logical explanations afterward. Fear disguises itself as rationality. Panic sounds intelligent when everyone around you agrees with it. And crowds are incredibly persuasive because humans evolved socially, not independently. Thousands of years ago, disagreeing with the tribe could get you killed. Today, that same instinct destroys long-term investing, because the market rewards independence, while human psychology punishes it. That contradiction sits at the center of almost every great fortune ever built. The people who achieve extraordinary returns usually endure long periods of looking foolish first, and most people psychologically cannot tolerate that feeling. They would rather be temporarily comforted than permanently wealthy, so they sell early. This happens constantly. A stock doubles, and people rush to lock in gains, not because it's logical, because emotionally, they're terrified of losing the feeling of winning. Humans are deeply loss-averse. The pain of losing feels stronger than the pleasure of gaining. So instead of allowing greatness to continue compounding, people interrupt it for emotional relief. And that single psychological weakness destroys fortunes more consistently than bad stock picking ever will. Because a true 100-bagger rarely moves in a straight line. It terrifies you along the way. It crashes. It looks overvalued. It gets mocked. It survives scandals, economic downturns, public doubt. And every single time, the market offers you an emotional exit door. Take the profit. Be realistic. You got lucky. Don't be greedy. The voices sound responsible. But often, they're just fear wearing sophisticated clothing. There's another uncomfortable truth hidden inside this idea. Most people secretly don't believe extraordinary outcomes are possible for them, which is why they unconsciously sabotage them. Imagine buying a stock at $2 and watching it climb to $20. Most people sell, not because the company stopped growing, because psychologically the gain already feels unbelievable. Their internal identity cannot emotionally process the possibility that it could still become $200. This is one of the strangest parts of human nature. People don't just fear losing money. They fear outcomes that exceed their self-image. Because enormous success creates psychological discomfort too. It changes identity, expectations, debt, relationships. And humans subconsciously resist identity disruption. That's why most people cut winners short while holding losers too long. Losers preserve hope. Winners force transformation. And transformation is emotionally terrifying. So investors become trapped inside short-term emotional thinking. They react instead of observing. They confuse volatility with danger. But volatility is not the same thing as risk. That distinction changes everything. A great business becoming temporarily cheaper is emotionally painful, not necessarily dangerous. A terrible business becoming temporarily expensive is emotionally exciting, often catastrophic. Yet human beings are drawn toward excitement far more than quality. That's why speculative manias happen over and over throughout history. Tulips.com bubbles, crypto frenzies, meme stocks, the details change. Human psychology doesn't. Crowds become intoxicated by momentum. Because social proof feels safer than independent thought. When everyone believes something, the brain relaxes. Consensus feels protective. But the greatest opportunities usually exist before consensus arrives. When uncertainty is still high. When narratives are still unclear. When nobody cares yet. Which creates a painful paradox. By the time an investment emotionally feels safe, most of the upside is already gone. And this applies far beyond investing. It applies to careers, relationships, business, creativity. Human beings constantly wait for social permission before acting. But social permission usually arrives after opportunity disappears. That's why extraordinary outcomes often require emotional isolation. You have to tolerate periods where nobody understands what you're doing. And psychologically, that's exhausting, because humans crave validation almost as much as survival. People want reassurance. They want certainty. But markets reward people who can function intelligently without emotional reassurance. That's rare. Very rare. One of the most powerful ideas inside 100 Baggers is deceptively simple. Great businesses compound because reality compounds. Not hype, not narratives, not excitement. Reality. A company that continuously reinvests capital at high returns becomes an economic machine. And over long enough periods, that machine starts looking magical. But it isn't magic. It's mathematics mixed with human impatience. That's the hidden formula. Compounding appears slow for an uncomfortably long time, then suddenly appears obvious, like bamboo growing underground for years before exploding upward. But most people cannot endure the invisible phase. Humans need evidence, immediate evidence. And modern culture has intensified this weakness dramatically. Everything now is optimized for short-term dopamine, notifications, algorithms, endless stimulation, instant feedback. People are psychologically trained to expect rapid emotional rewards, which makes long-term investing emotionally unbearable for most, because real wealth creation is usually boring, yet uneventful, anticlimactic. There's no dramatic soundtrack while compounding happens. Most days feel ordinary, and humans hate ordinary, because ordinary doesn't feel emotionally significant. But extraordinary outcomes are often built through ordinary days, repeated consistently for years. That's the psychological trap. People want cinematic results without enduring the non-cinematic process required to create them, so they chase intensity instead, fast money, quick flips, constant action, and the market punishes emotional urgency mercilessly, because urgency weakens judgment. The more emotionally desperate someone becomes, easier they are to manipulate. That's why financial media thrives on fear and excitement. Calm thinking doesn't generate attention. Emotional stimulation does. Fear keeps people watching. Greed keeps people clicking. Modern finance has become partially theatrical, a performance ecosystem built around emotional activation, because emotionally activated people consume more content and make worse decisions. The calmer you become, harder you are to manipulate. And that may be the deepest lesson hidden beneath all of this. The greatest investors are often emotionally unremarkable people. Not because they lack emotion, because they refuse to obey every emotion they feel. That's different. Anyone can feel fear. Wisdom is what happens next. There's a moment almost every long-term investor experiences. A strange emotional moment. The stock hasn't moved much in years. Nothing exciting is happening. Everyone else seems to be making faster money somewhere else. And slowly, doubt begins creeping in. Maybe this was a mistake. Maybe I'm wasting time. Maybe I'm falling behind. That feeling destroys more wealth than crashes do, because comparison is psychologically corrosive. Human beings are status-sensitive creatures. We measure ourselves socially. And in investing, comparison creates impatience. Impatience creates bad decisions. You see someone getting rich quickly in speculation, and suddenly your slow compounding feels inadequate. But hidden beneath that emotion is something deeper. Ego. People don't just want wealth. They want visible progress, visible superiority, visible momentum. And that desire makes them vulnerable. The market constantly exploits ego. It seduces people into overconfidence during bull markets, then humiliates them during collapses. Because ego confuses temporary success with permanent intelligence. That's why many investors feel brilliant right before disaster, and humble right before opportunity. Psychology flips reality upside down. The truly dangerous investor isn't the fearful one. It's the euphoric one, because fear creates caution. Euphoria destroys boundaries. When people start believing they've figured out the market, risk quietly expands underneath them, and eventually reality returns. It always returns. That's another uncomfortable truth about markets. Reality eventually humiliates delusion. Always. Maybe not immediately, maybe not publicly, but eventually. Which is why sustainable wealth creation tends to look emotionally boring compared to speculative frenzy. It's built on discipline, patience, restraint, independent thinking. Traits that rarely look exciting in real time. And yet, those quiet traits build empires. There's also something deeply philosophical about the idea of 100-bagger, because it forces a person to confront time differently. Most people think in days, weeks, months. Great compounding requires thinking in decades, and decades change behavior. When someone truly adopts long-term thinking, their emotional relationship with uncertainty transforms. Temporary chaos becomes less threatening. Short-term volatility loses psychological power. The future stops feeling like something to fear, and starts feeling like something to partner with. That shift is rare, because modern society psychologically conditions people into short time horizons. Quarterly results, monthly performance, daily metrics, instant judgment. Everything pushes people toward immediacy. But compounding belongs to people emotionally capable of delayed gratification. And delayed gratification has become almost rebellious now, because patience no longer feels natural in a hyper-stimulated world. It feels unnatural, even painful. And yet the people who master that discomfort often separate themselves financially in extraordinary ways, not because they discovered secret information, because they mastered themselves. That's the hidden edge. Self-control. The ability to remain rational while others emotionally spiral. To remain patient while others compulsively react. To remain independent while crowds desperately seek consensus. And maybe that's why the philosophy inside 100 baggers feels strangely timeless. It's not really about stocks. It's about human nature colliding with time. And time exposes everything. It exposes weak businesses, weak narratives, weak conviction, weak character. But it also rewards consistency in ways humans emotionally underestimate. A tiny advantage sustained long enough becomes enormous. That's true financially, psychologically, physically, emotionally. Life itself compounds, habits compound, relationships compound, resentment compounds, discipline compounds, neglect compounds. People often imagine transformation as dramatic, but most transformation is invisible while it's happening, until one day, it suddenly looks inevitable. That's the illusion of compounding. The ending looks obvious, the process never does. And maybe that's why so few people ever hold on to true greatness. Because holding greatness requires enduring ambiguity longer than most people psychologically can. You have to survive boredom, doubt, criticism, volatility, envy, fear, not once, repeatedly for years, and all the while, the world keeps tempting you emotionally. Take the safe win. Lock it in, move on. But the biggest outcomes in life often come from staying with something longer than other people think is reasonable. A business, a craft, a relationship, a vision. The world constantly underestimates the power of sustained commitment, because sustained commitment is emotionally difficult. Most people quit during the invisible phase, before compounding becomes visible. And that's why the idea of 100-bagger feels almost mythical. Not because it's financially impossible, because psychologically, very few people are built to endure the journey required to reach one. In the end, 100-baggers reveals something unsettling. The biggest obstacle to wealth is usually not the market. It's human nature, the craving for certainty, the addiction to validation, the fear of looking wrong, the inability to sit still, while time quietly does the heavy lifting. People spend their entire lives searching for the perfect opportunity, while destroying the opportunities they already had through emotional impatience. And maybe the final irony is this: the fortunes that look impossible in hindsight often began as painfully ordinary decisions made with unusual patience. Quiet decisions, uncelebrated decisions, the kind nobody posts online. Just someone, sitting alone, believing in something long enough for reality to finally catch up. And in a culture obsessed with speed, that kind of patience almost looks insane. Until one day, it looks legendary.